Welcome to Lesson 11, and in this module of 11 through 15 we're going to be talking to you about the different types of trading and showing you how these relate to the other things that we've been learning. It's very straightforward. The market can only be in 5 types of trading, and they're readily understandable. There's a trend run, and then there's congestion. And congestion is further divided into congestion entrance, congestion action, and congestion exit. And then there's a trend reversal, which would be the 5th type of trading. The market can only be in one of these 5 types of trading, and there's a logical progression of one to the next. There's only certain things which can happen. And so the types of trading are going to be very helpful to us as we look at the market and analyze the action. But we want you to understand something very important here. We never want you to move very far away from the fundamental concept that we introduced in Lesson 1, and that is that the market will always be engaged in a PL.push or a PL.refresh. And that we see this again and again and again and again and again, and it occurs on all time frames simultaneously. And the way these time frames interact with each other in terms of their PL.pushes and their PL.refreshes is the name of the game in trading. The types of trading that we're teaching you now is a way of quantifying and measuring and dealing with this PL.push and PL.refresh. In a trend run, for example, we're going to be able to see the PL.pushing all over the place on the higher time period and on the lower time period as well, because we know that the PL dots drive energy. And conversely, when we see congestion entrance trading, we know that that's the beginning of a refresh, a PL.refresh. And so we see both the PL.push and the PL.refresh, and we see how closely they can be associated with the types of trading. Well, we'll talk more about the other types of trading as we get further into this module. But there's one further point we want to point out here, and that is that a trend run should be 100% predictable. And it is so because we know that there will always be PL.pushes and PL.refreshes. If you have, for example, a monthly 5-9 up outside the monthly envelope bottom, and that 5-9 up occurs in the area of quarterly nearby support, and that quarterly nearby support is in the area of the quarterly envelope bottom, then the quarterly is going to go for a quarterly PL.refresh, and that will require a monthly PL.refresh, and this will show up on the weekly as stronger and stronger weekly PL.refreshes to the upside and weaker PL.refreshes to the downside. And in the process, the daily has 100% predictability of daily trend runs up, more daily trend runs up than trend runs down. And if the monthly is going to refresh to the upside, then the daily has no question that it will do it. We will see stronger and stronger daily trend runs up daily than trend runs down, stronger and stronger daily PL.pushes and PL.refreshes to the upside, and weaker daily PL.pushes and PL.refreshes to the downside. If the monthly is going to refresh to the upside, then the daily has no question that it will go along with it. There are similar situations in trend runs and congestion action and so forth. There's lots to learn here and lots to know. But our point is the fundamental principles are very clear and very solid. We don't want you to look at screen after screen after screen and get screenitis and stop thinking and just let this material wash over you. We want you to understand the context that we're giving you this information. The context is that PL.pushes and PL.refreshes are the fundamental energy of the market. The context is that PL.pushes and PL.refreshes will always occur on all time frames. The concept is that the types of trading helps us organize this energy. The envelope theory helps us organize the energy areas. When we organize our perception and our vision, then we can trade extremely successfully. Okay. Okay, enough of this for the moment. Let's get on to Lesson 11.